Nvidia's stock went up over 200% in a single year. Everyone knows that story. But here's what most people missed. There's another American chip company quietly sitting at the center of the AI revolution. And Wall Street analysts are starting to compare it directly to Nvidia's historic run. That company is Micron Technology. And the case being made right now is not subtle. We're talking about analysts throwing out price targets that would represent gains of 50, 60, even 80% from current levels. One major firm called it the most underappreciated AI trade of the decade. So why haven't you heard more about it? And more importantly, is the comparison to Nvidia actually legitimate? Or is this just hype looking for a host? Stick around, because by the end of this video, you're going to understand exactly what's happening inside Micron, why the timing matters so much right now, and what it could mean for your understanding of where AI is actually heading. To understand why Micron is suddenly getting this kind of attention, you need to understand a shift that's been quietly happening inside the AI industry. For the past 2 years, everyone was focused on compute, GPUs, processing power. Nvidia owned that conversation completely. But here's the thing about building AI systems. Raw compute is only half the equation. You also need memory. Enormous amounts of it. Fast memory. Memory that can keep up with the insane data throughput that modern AI models demand. And that's where most people's understanding of the AI supply chain just stops. Think of it this way. Imagine you have the world's fastest chef. That's your GPU. But if the kitchen only has one tiny pantry, that chef is constantly standing around waiting for ingredients. The pantry is your memory. And right now, the AI industry is building kitchens that require warehouses, not pantries. Micron is one of only 3 companies in the entire world that manufactures DRAM memory at scale. The other 2 are Samsung and SK Hynix, both based in South Korea. Micron is the only American company in that group. That fact alone has caught the attention of policymakers, defense analysts, and increasingly investors who are watching the geopolitical dynamics around semiconductors shift in real time. But the deeper story isn't about geopolitics. It's about a specific type of memory product that Micron makes, one that didn't even exist in meaningful commercial quantities 3 years ago. And that product is quietly becoming one of the most critical components in every major AI data center on the planet. We'll get into exactly what that is in a moment. The product at the center of this story is called HBM, High Bandwidth Memory. And if you haven't heard of it yet, remember that name, because you're going to be hearing it a lot. Regular memory, the kind in your laptop or phone, moves data at a certain speed. It works fine for normal computing tasks. But AI training and inference, the process of running a model to generate outputs, requires moving absolutely massive amounts of data between the processor and memory in fractions of a second. Standard memory can't keep up. It becomes the bottleneck. HBM solves that problem by stacking memory chips vertically, directly on top of or right next to the processor, using a technology called a silicon interposer. Instead of data traveling through a relatively slow external bus, it moves through thousands of tiny connections simultaneously. We're talking bandwidth that is anywhere from 5 to 10 times faster than conventional memory. That is not a small improvement. That is a generational leap. Here's where it gets interesting. Nvidia's most powerful AI chips, the H100 and the newer H200 and Blackwell series, all require HBM, not as an option, as a requirement. Without HBM, these chips cannot perform at the level AI companies are paying hundreds of thousands of dollars per unit to access. And for most of Nvidia's recent dominance, the primary supplier of HBM has been SK Hynix. Micron was behind. They knew it, their investors knew it, and their stock reflected that reality. But then something changed. Micron began shipping its own HBM3E product. That's the current generation of HBM. And the early benchmarks were not just competitive. In some metrics, they were better. Micron's HBM3E reportedly offers higher energy efficiency than competing products, which matters enormously when you're running data centers that consume as much electricity as small cities. Nvidia validated Micron's product for use in its systems, and suddenly the calculus shifted. The addressable market for HBM is expected to grow from roughly $4 billion in 2023 to somewhere between $30 and $40 billion by 2027. That's not a market that's growing, that's a market that's exploding, and Micron is now positioned to capture a meaningful slice of it. Let's go a layer deeper, because most of the coverage around Micron focuses on the headline numbers without explaining the structural reasons why this opportunity is so durable. First, there's the supply constraint problem. HBM is genuinely hard to make. Building it requires advanced packaging technology, tight integration between chip design and manufacturing, and significant capital investment. The barriers to entry are enormous. New competitors cannot simply appear. This isn't like building an app or launching a software product. You're talking about fabs that cost $10 to $20 billion to construct and years to bring online. The moat is real. Second, consider the customer concentration on the demand side. The biggest buyers of HBM right now are the hyperscalers, companies like Microsoft, Google, Amazon, and Meta, and they are in an arms race with each other to build out AI infrastructure. None of them can afford to fall behind, which means their demand is not discretionary. They are not going to slow down their orders because the economy gets a little choppy. This is infrastructure spending driven by competitive necessity, not optimism. But wait, here's the piece that most people completely overlook. HBM isn't just for training massive frontier models anymore. As AI inference, meaning the actual deployment of AI models to end users, scales up, the demand for HBM is going to multiply again. Every time you use a product powered by a large language model, somewhere in a data center, HBM is doing work. And the number of AI-powered interactions happening globally is growing at a rate that is genuinely hard to wrap your head around. We're talking about moving from millions of daily AI queries to potentially trillions within a few years. There's also a pricing dynamic worth understanding. Because HBM supply is constrained and demand is surging, Micron and its competitors have significant pricing power. Analysts at Morgan Stanley estimated that HBM average selling prices could increase 30 to 40% year over year through 2025. In an industry where prices typically fall over time due to commoditization, that kind of pricing strength is almost unheard of. It's one of the specific reasons Wall Street keeps reaching for the Nvidia comparison. Because Nvidia's explosive earnings growth wasn't just about selling more chips, it was about selling them at dramatically higher margins. Micron may be entering a similar dynamic. The energy efficiency angle also deserves more attention than it gets. Data centers are running into real physical limits around power consumption. The more energy efficient a memory solution is, the more competitive it becomes, not just on performance specs, but on total cost of ownership for the customer. Micron's HBM3E efficiency claims, if they hold up at scale, represent a genuine competitive differentiator. So what does all of this actually mean if you're not a semiconductor analyst sitting on Wall Street? If you're a developer or someone working in AI, it means the infrastructure supporting the tools you use every day is about to get significantly faster and more capable. HBM advancements translate directly into AI models that can process more data, respond more quickly, and run more efficiently. The hardware wins at the bottom of the stack eventually become software wins at the top. If you're someone thinking about the investment angle, the Micron story represents something the market tends to underprice: the picks and shovels play. During the gold rush, the people who reliably made money weren't always the miners. They were the ones selling the shovels. Nvidia captured enormous value as the primary processor supplier for AI. The argument being made now is that memory, specifically HBM, is the next critical constraint in the AI build-out, and that whoever wins in that market could see a similar dynamic play out in their financials. That said, Micron's business is not without risk. The memory industry is historically cyclical. Oversupply in conventional DRAM and NAND markets has crushed Micron's earnings in past downturns. The company is also still catching up to SK Hynix in HBM market share. And geopolitical risks around Taiwan, China, and global semiconductor supply chains add a layer of uncertainty that can move quickly. None of this is a reason to dismiss the thesis, but it is a reason to understand what you're dealing with. For the broader industry, Micron's rise matters because it signals that the AI hardware ecosystem is maturing and diversifying. The narrative is no longer just Nvidia equals AI. The supply chain is becoming more visible, more scrutinized, and more critical to national economic strategy. The CHIPS Act investments, the push to reshore semiconductor manufacturing, all of that is creating a policy tailwind that directly benefits a company like Micron. Looking forward, there are a few specific things worth watching closely. Micron's HBM market share trajectory over the next 2 to 3 quarters will be the clearest signal of whether the thesis is playing out. If they can capture 25 to 30% of the HBM market, some analysts think that's achievable by end of 2025. The revenue impact on their financials will be substantial and hard to ignore. The ramp of Nvidia's Blackwell architecture is another key data point. Blackwell chips require even more HBM per unit than previous generations. More Blackwell chips in the market means more HBM demand. Full stop. Every data center announcement from Microsoft, Google, or Amazon that references Blackwell is indirectly a positive signal for Micron. Watch also for any announcements around custom AI chip programs. Companies like Google with its TPUs and Amazon with its Trainium chips are developing their own processors, and they all need memory solutions. If Micron secures HBM supply agreements with any of these custom silicon programs, that would be a significant validation event. The next 6 to 12 months are going to tell us a lot about whether Micron's HBM momentum is real and sustainable, or whether SK Hynix and Samsung reassert dominance. But right now, the setup is more interesting than it has been in years. Wall Street doesn't make the Nvidia comparison lightly. Whether or not it plays out exactly that way, the underlying shift in what the AI industry needs, and who can supply it, is as real as it gets. And if you're a YouTube creator yourself, check out CPM Scout at cpmscout.com. It shows you exactly which topics pay the highest CPM so you can make smarter videos. Link in the description.